Welcome to the Solemn Yugioh channel, where we cover everything collecting and investing in these beautiful cards. Do note, I am no financial advisor. If you need financial advice, go to a licensed professional who will give you really solid financial advice. That isn't me. Today we are talking about different asset classes. Yes, this is not very Yu-Gi-Oh related. Well, if you're here for investment kind of videos, then it will be. But let's go over the various assets. Now, surely there are a lot of assets that I will probably not cover. If you're hoping to hear about the latest crocodile handbag that's going up 200%, I don't know anything about that. So I'll be giving you general categories and it'll probably fit somewhere in there, but this will just be a really quick overview. Why? Well, I very often get questions from people who are not financially established and aren't even interested in being rational with money, hoping that they will buy some Yu-Gi-Oh card and then tomorrow be a millionaire. So I really wanted to explain basically in a video what else is out there, because I often say, first of all, you want emergency funds, then you want some actual financial assets, and then you can get a little bit more playful with a tiny fraction of your wealth on maybe some of these cool vintage cards, so you don't get burned in case things go wrong. Because yes, playing cards are very speculative in nature. So, going over the various asset classes. First of all, we have stock. I think everyone knows what stock is. It's essentially a partial ownership in some type of company, often publicly traded. Now, if you own your own company, you probably also have stock in your own company, and then it's a private company. Let's not get into too many details, let's say. In the world of stock, there's still a billion of options that's still out there. Oh, I'm gonna be an options trader. Oh, I'm gonna short this stock. Oh, I'm gonna buy an index fund. Oh, I'm gonna buy a single stock, blah, blah, blah. There's a lot of shit to go through. When it comes to stock, there's entire channels built around stock. There's entire books and papers written on it. So don't expect me to give you the entire university class here in the 1 minute where we talk about stocks. If you're interested in stocks, you can research them. But in general, you buy a slight piece of the pie, let's say, of a company, and then you get a fraction of the profits of said company paid out to you if you have a dividend paying stock, or you have some type of accumulating fund where said dividend instead instantly gets reinvested into the company, or the company doesn't pay dividend at all. Let's not get into too many details. In general though, it just means, cool, I have a part of this company and that pays me profit. Or in the future, if the company grew, I can now sell this stock at a higher price. Stock tends to be the cornerstone of a lot of people's portfolios, let's say, because it's one of the easiest things to trade. It is not a house that you have to sell and you have to get the entire government involved and you have to get all these papers and blah, 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 and move people in and out and all these laws. In general, it's much easier than real estate. You don't need as much capital either. In theory, you could put $1 into a stock. Well, you also have these fees that you have to pay and blah, 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 stuff like that. But let's just say it's much easier to buy a stock than a house. So that's why a lot of people's portfolios, let's say, are often based on those. Now, speaking of housing, then there's real estate. Very simply, you own someone's house or you own a property that some company uses. On paper, the government knows Mr. Jimmy here owns this place, and now he makes some type of wage or profit by either managing it or just for the fact that he owns it. Of course, this is very stable because even if the stock market goes down, generally you still know I'm still gonna get rent. Now, if we have an actual black swan event where everything goes to shit, maybe you have to wait a little while on your rent. Maybe the government then goes, oh, and you can't push people out either because that would be immoral, and then you're just fucked because you still have to pay the loan. But hey, maybe the government tells you, oh, you don't have to pay the loan this month, but you do have to pay it next month. Good luck, buddy. But so real estate is a thing. Generally less volatile than stock. You know, a stock you could buy it today and it might go down 30% tomorrow and it might go up 50% the day after. But again, you also need a lot more money to buy real estate. Now, some people may say, oh, but you can also invest in a fund like a REIT that then owns real estate, blah, blah, blah. Sure, again, there's entire courses built on this. But very simply, real estate is a home or something, a property you rent out. Pretty simple. It requires a lot of knowledge, experience, and of course way more capital. Then there's fixed income, something like a bond, the debt market. You are essentially buying someone else's loan, and then you are getting the interest payments of that in the form of coupons and so forth. There are a lot of different mechanisms to own debt or get a form of fixed income. Personally, I am not super knowledgeable on these because in Belgium, the amount of tax you pay on something like a bond coupon is insanity. So compared to just owning stock, it's just a really dumb move. Now a bank may tell you like, oh, hey, Teresa is 80 and the bank is gonna make a lot of money by telling her to buy some bonds because it's still much safer, you know. Teresa is still gonna lose a fucking shit ton on taxes, but whatever. So in general, I am not super versed into bonds because tax-wise, it's just not very smart for me to own them. And so I never felt a need to go very deep into them. But they are a legitimate thing. Right now, as far as I'm aware, the coupons aren't that great because of circumstances like interest rates. So even in America, maybe right now they're not the best bet. Regardless, they're a legitimate asset class, and depending on various factors, they may or may not be a good choice for you. I have determined that for me they aren't, but maybe for you they are. Very often, if stocks are the cornerstone of an average person's portfolio, bonds tend to be what fills up the rest. So a lot of people, like you take your average person that is still somewhat versed in finances, they will have their own home, they will have mostly stock, some bonds and cash, and that's basically their entire wealth tied up into those four things. Now this is not necessarily like the best move and you have to do it like this. I'm just saying that's usually what people do. Maybe fifth would be like someone then puts 5% of their money into something more playful, and that's what we often see people do. Now next up is currency. You can literally just own some dollars. One can say, oh, that's not an investment or that's not an asset class. Well, there is always the fear of, let's say, hyperinflation. You know, oh, we're gonna go back to 1928 Germany and everything's going to shit. And so if all of your money is into one currency and that currency gets fucked by hyperinflation, at that point you are ruined. By having different forms of currency, maybe you have some dollar and some euro, maybe you're a bit more hedged against that. Now, that's a maybe, because maybe all of the markets go into that at once. And again, it's very complex. There's entire papers written on this. But so yes, some people may actually, to hedge their risk, have different forms of currency. Now, whether you put crypto into this or you put it into commodities, I'm not a economics professor, but so just be very aware. Yes, currency can be an asset class. Now, should your entire portfolio be currency? Maybe not. In general, currency doesn't beat inflation because, well, inflation affects currency. Whatever. Apart from some really odd events, you're not very often gonna profit off currency, of just owning the thing, unless we have deflation, in which case there's gonna be some real shit happening to your country soon. And then finally, we have commodities like gold, silver, collectibles. Now you could split those off. Maybe you want to say like, oh, we have our collectibles and we have our gold and silver. Cool, whatever. Some people believe that there will be hyperinflation across all fiat currency because it is no longer tied to gold. And so therefore, maybe if all the currencies, all the fiat currencies get fucked, the people who own crypto and gold and silver may come out on top. That's a theory that many people have. Some people are conspiracy theorists and say that fiat currency will die, and so it's much better to own some gold, some bullion, silver, some crypto, blah, blah, blah. And so yes, some people also claim that gold is a good hedge against crashes. And so we did sometimes see that, oh, there's a lack of trust in the markets, and so now the gold is going up. Personally, I'm not interested in owning this. If you're interested in owning that, do your research. Once again, there have been countless papers and university courses. You're not gonna get this out of this one single video. Finally, we have collectibles. Inside collectibles, you could have antique. Maybe there's a beautiful table made by some genius in the 1650s. Maybe that has appreciated over time. Maybe there's wine. Maybe there's some documents. Oh, maybe the Declaration of Independence. I don't think anyone owns that actually. Does a museum own that? And of course, your cards are also in the collectible asset class. Some of these cards will go up a lot and have gone up a lot. Some of these other cards will not go up at all. Now, if you go to a financial advisor, and we have just gone through these different assets, and you tell him, oh yeah, so I own my 10% crypto, I own 10% gold because fiat currency sucks, and then the remaining 80 is in Pokemon cards. That financial advisor will punch you in the face, and then tell you to get out. So in general, when we get to these last few categories, they are not gonna be the cornerstone of your entire financial future, let's say. Regardless, they can be a fun way to diversify. And of course, some of these have a track record of going up a lot. And if you truly love these collectibles, it's an option. I'm just saying. But I personally would never want more than 20% of my portfolio being in collectibles. Now, my collectibles have gone up so much that they are now above that, but in the coming months I will fix that. I will reevaluate how I fix all of this. But again, long term, you don't want your financial future depending on whether or not your Pikachu goes up in value. Let's put it that way. So I hope this was a little bit interesting. Like this video, subscribe, and I will see you soon. Ciao.